It is generally agreed that the second quarter of May will not be as rosy as the first quarter, and this could lead to a decline in Tesla's stock price. More recently, Tesla shares fell more than 12%, while the tech-focused Nasdaq composite fell about 4%. Apple, Amazon, Google, and Facebook parent companies were among the big tech stocks that fell more than 3%. Shares of electric car manufacturers Rivian and Lucid also fell by 9.5% and 8.5%, respectively. So, what do Tesla and its investors have in store for Q2? Let's dive into it. In a truly exceptional quarter, Tesla hit several beats as demand continued to outpace supply. It has demonstrated its manufacturing efficiency and superiority in the market. Revenue was $18.8 billion, up 80.5% year over year versus $18 billion Wall Street estimates. It also generated adjusted earnings per share of $3.22, significantly beating the census forecast of $2.26. While some are concerned about Tesla's future performance, the market remains optimistic, considering the company's relative outperformance versus its automotive peers. As a result, we believe Tesla's Q1 performance has already been taken into account. Even after excluding regulatory credits, Tesla's profits were astonishing. Furthermore, the company's ability to reduce sales costs while increasing prices highlighted its manufacturing efficiency and exceptional pricing. Leadership. Tesla's CEO Elon Musk said the company is facing supply issues, but has no immediate concerns about demand issues. As a result, this should allay some investors' concerns about a more competitive environment. We also believe the company is well positioned to thrive in the fast-growing electric vehicle sector, which will thrive despite rising inflation. However, we believe that investors' attention should be drawn to the production recovery programs in the second quarter. On the other hand, Musk is optimistic about the Giga Shanghai restart. He also maintained Tesla's production growth rate at 50%, even predicting the possibility of achieving 60% growth by the end of 2022. Automakers, including Tesla, are struggling to cope with rising raw material costs for batteries, as well as a shortage of semiconductor chips exacerbated by COVID restrictions in Shanghai. While Tesla's vehicle revenue increased 87% year over year to $16.86 billion in the first quarter of 2022, the company lost nearly a month of construction volume in Shanghai due to coronavirus lockdowns, the company claimed in its earnings statement on 20 April. In the first quarter of 2022, Tesla generated $4.65 billion in China. Tesla's revenue currently comes from China at a rate of 24.8%. Tesla has also begun shipping vehicles from China to markets in Asia and Europe. The company built a new manufacturing plant in Austin, Texas, as well as another in Brandenburg, Germany. On the company's results call, CFO Zach Kirkhorn stated that delivery times for most vehicles are fairly long. Those delivered in the first quarter had a price set in previous quarters that was lower than what is being asked now. He then added that production is resuming at a restricted level, and we aim to return to full production as soon as possible. Tesla also has no plans to raise prices anytime soon. Current costs are for a vehicle that will be delivered in the future, such as 6 to 12 months from now, Musk said on the same call. Analysts were particularly concerned about the impact of recent supply chain issues and rising raw material costs on Tesla's bottom line. On the other hand, Tesla's strong adjusted EPS performance underscored to investors the company's exceptional ability to generate profits in a difficult macro environment. The company disclosed regulatory credits of $679 million, far exceeding the average estimate of $312 million. Even after removing the credits, Tesla still generated adjusted EPS of $2.90, well above the street's forecast of $2.26 for the first time. Automotive gross margins exceeded 30%. Tesla also stated that it has begun a series of price increases in anticipation of rising costs in the future. While these issues may not have been fully reflected in the P&L, we expect reaching the 30% mark in Q2 to be difficult, according to recent commentary. China's leading battery supplier, cattle is experiencing major raw material cost issues as it prepares to release its first quarter card. These difficulties were expected to significantly impact the company's profitability in the first quarter. In addition, cattle has proposed raising prices with its customers as their contract renewal dates approach. As a result, sources in China claim that cattle is likely to significantly boost its prices starting in the second quarter, according to Shanghai Securities News. One thing is for sure that rising prices of battery raw materials have led to pressure. Putting pressure on major battery manufacturers like CATL, the rise in raw material prices will trickle down to EV manufacturers in the future, putting customers on the hook for another round of EV price hikes. Customers will see higher prices from Seattle in the second quarter. However, Tesla is still in talks with CATL, and the current topic of conversation is whether to raise prices by 10% or 15%, as Apple and Microsoft have indicated. There has been a movement in market sentiment away from high-tech stocks, but on the other hand, there are concerns about ongoing coronavirus-related lockdowns in China and supply chain issues. In its earnings conference call, Tesla also hinted at contract renewals. Zachary Kirkhorn, CFO, emphasized that raw materials represent 10% to 15% of the total cost structure, but also have no immediate or direct impact on the company, according to Kirkhorn. Tesla has arrangements with resellers in some circumstances. However, he said that once these contracts expire, we should renegotiate them to allow for a period of time. Our contracts, in some cases, immediately reflect changes in commodity or raw material prices. However, due to the contract, the timing in which Tesla pays for it is also delayed in the third and fourth quarters. It is believed that production will be much higher as a result. It looks like they may be able to build more than 1.5 million cars this year. It takes about 9 to 12 months from the start of production to the point where the plant is complete and producing a modest number of units, to the point where it is producing high-quality cars in volume. However, it may take more than a year to reach the level of 5,000 per week from the start of production. There's also the Twitter situation. After Elon acquired Twitter, Tesla's stock price took a slight hit. This decline came just one day after Twitter's board of directors approved Musk's $44 billion acquisition of the company, meaning some of the declines are due to investor concerns about the deal. Musk's total debt obligations are $25.5 billion, including $12.5 billion in loans secured against his Tesla shares. The deal includes a total of $21 billion in equity. Despite being the world's richest man, Musk's fortune is heavily invested in Tesla shares, meaning he will have to borrow against his assets to push the deal. Tesla investors may also be concerned about the potential distractions that owning a platform like Twitter might bring. Musk wanted a big say in how the company operated, which could put him under time pressure. Musk will be in charge of Tesla, Twitter, and SpaceX if the acquisition goes through. He also owns The Boring Company and Neuralink, two small companies. We feel Musk's optimism is noteworthy as well. The Giga Shanghai shutdown is expected to result in Tesla losing approximately 50,000 manufacturing units. The company, on the other hand, is dedicated to building the Model Y and streamlining production. The Model Y body has been simplified as a result of the new Giga Texas production method. Compared to the construction of the current Model 3, Tesla has removed more than 1,600 welds and significantly reduced the structure of the Model Y. In the earnings call, Tesla explained the improvements. They also stressed that because they had learned so much, they should be able to ramp up manufacturing faster in Texas and Berlin than in Shanghai. Is it possible for Tesla to have a great 2022, though? Tesla, for example, thinks so. This is evident through various aspects of management's optimism, from the key lessons learned from the Shanghai cliff during the earnings call. She also believes that significant improvements in the cutting-edge manufacturing process will be critical. We believe Tesla has shown its automotive and technology peers how to perform in a very difficult macro context. But instead of making excuses, the Tesla crew continued to excel in various situations, no matter how difficult. However, a combination of all the factors we mentioned in this video could cause a shift in market sentiment and hurt Tesla's stock price. Do you think Tesla will have a great second quarter? Comment below.